Very warm welcome to you all to this first panel discussion of this conference entitled Uncertain Times, Geopolitics, Trade and Rate Cycles in 2020. Given that we're at the very beginning of the year, it is a great time to be holding such a panel to try and work out just what is going to happen and how we can prepare for it. Let's start with Wiebke. What about you? What do you think are the main risks facing the region that you look after?
Thank you. No, thank you. And I want to say, first of all, I'm actually an optimist by nature, so I think that helps. Also at the start of this year, which I think left us or gave us some excitement already. And I do want to say, before I'm focusing on the risk too much, that for me a positive news is at least that recent World Bank forecasts have shown that the projected growth for the region and the broader sort of Eastern Europe, Central Asia region is actually higher than last year, around 2.5%. And we could even be more optimistic for the next 1 or 2 years, going up to 3% almost. So that's sort of positive. That of course comes with a lot of ifs.
Yep.
I think in terms of risks, it's really the external picture. We've heard it from a couple of the speakers before. Obviously, the CEE is extremely integrated, connected to the global economy and in particular the Eurozone. But I think if you think about, the title of the panel is Uncertain Times, right? Yeah. So I think in uncertain times, it's even more important that economies are resilient and they're able to absorb shocks. And in this regard, I think the CEE regions have monetary space, more so than, for example, the ECB. They also have fiscal space. But given the integration in the global economy, the question of CEE resilience is ultimately a question of how resilient also the Eurozone economy is. And we did some research together with the London School of Economics last year, where we looked at the resilience of different countries and the shock absorbing capacity of different countries. And we actually found that the Eurozone is less resilient today than it was in 2007. And therefore, if I think about resilience of the CEE, then we just need to be cognizant that resilience is not only a domestic issue, but very much a global and shared responsibility.
Low growth is a threat. The China trade war is a threat. Trump, of course, is always a threat. But if you have confidence in your central banks, then markets can be fine.
Very interesting, Toby, that low growth is the biggest fear looking forward. It's in many ways, that's a baseline of what you project your growth to be. So obviously the participants are thinking that growth could be at a downward risk scenario. And I think what's important here is to step back and take a few seconds to think about where we are in a macroeconomic context in advanced Europe, which helps us think about what the spillovers could be to Central Eastern Europe. And I think in advanced Europe, what you have is a trade and manufacturing slowdown that is basically coming from the external, as was just pointed out. And that has hit pretty sharply to the German economy, but investment has been down, and you are seeing the effects of that. And our sense is that as long as labor markets stay strong, that would be fine. But we are beginning to see a slowdown in services, and that should have an impact in terms of spillovers to Central and Eastern Europe.
Okay, so a slightly crazy question here, but so we're celebrating 25 years of the conference today. I'd like to ask you, when we're holding this event in 25 years' time, will we still have European QE?
Will the ECB's balance sheet be bigger than it is today? Almost certainly.
Yeah.
Will the ECB ever unwind QE? Probably not. And we have a very clear roadmap from the Bank of Japan on that. And actually, I've even heard ECB speakers, even hawkish ones like Klaus Knott, basically admit that the balance sheet will never get unwound properly. And you actually you see it with the Fed. I mean, look how short quantitative tightening was, and look, this is here to stay. And that's why things like here's an even crazier thing to say. It's the reason why things like modern monetary theory, we won't get it in its full full wave that some people expect, but you'll get elements of it. So the balance sheets are bigger, and they're going to stay bigger.